self-employed and you make more money than your tax return shows, we've got the solution.
It's a very common problem. I've been in the business almost 30 years. Jason, I know you're close to that. And self-employed people are always concerned about the ability to get a mortgage loan. Well, I have good news. We have something called bank statement loans. How do those work, Jason?
So a bank statement loan, instead of using your tax returns, you're able to take the deposits of your business that show on your bank statements, and then we take a percentage of that. And we have a lot of clients that are able to get into houses that they didn't think they could because they're writing off a bunch of stuff or they have a bunch of expenses.
To kind of recap what he said is, we know your tax return income isn't what your actual income is. So you can't qualify on your tax return income. You can qualify on your actual income. So what better way to find out what your actual income is than take 12 months of your business bank statements and divide it by 12 on the deposits. That's the number we can use to qualify you. You always hear that you have to be self-employed at least 2 years to get a mortgage loan, and that's just simply not the case. What are some of the variations to that, Jason?
We've had several clients close over the last 6 months that have been 1 year self-employed. We've got several programs that are not going to fit the traditional, conventional loan that you have to have 2 years and 2 years tax returns. We've got programs that you can literally be 1 year self-employed and we can get a loan for you.
I actually did one recently where he was only 6 months self-employed, and the deposits for the 6 months were so outstanding, on averaging 6 months of deposits. He qualified so much that the lender was okay with the 6 months, even versus a year, and definitely not 2 years.
Right. So another situation that works out really well is, let's say you were a truck driver and you drove for a company and you were W-2. And you decided you were going to buy your own truck, right? You buy your own truck and you're only self-employed for a year. We're actually going to take the history that you've had being a truck driver and be able to use the self-employed income for that year. So we've got programs that are way outside of the box and that can help our self-employed borrowers out.
Truck drivers, a perfect example. Hairdressers, a great example. Traveling nurses, people that are on W-2, pay stub, regular type positions and decide to be a contractor on their own, because it makes complete sense to do, because they're working for multiple different companies. In the past, you had to wait 2 years and have 2 years of tax returns with that history. No more. We have alternatives to that can get you into a mortgage.
So let's say you don't have bank statements that you can produce. We've got other programs that can help you out. As long as you've got some down payment, we've got some programs that we don't have to have any income documentation.
That's great. It's a great point. I mean, I see this a lot where someone has money in an investment account. Their retirement age, they have money in their retirement account, but they don't have a regular W-2 or pay stub or something like, hey, I can't buy a house. That's absolutely not true. It's called asset qualification. How does that work?
So asset qualification is literally, if you have money in a bank account, we take a percentage of that, divide it over a 5-year period, and as long as that works, then we can get you in a house.
It's creating an income stream that literally you could create if you decided to liquidate the funds and the investment or the retirement or whatever account. We can use that to qualify you.
Let me give you an example of a couple situations that I've had recently. Number one, I had a hairdresser. Okay, a hairdresser that was basically self-employed, and they were running money, obviously through their business account, and we were able to get them in a house with 10% down.
Which would have never happened with a normal traditional loan, because the traditional loan would have looked at the tax returns and it doesn't reflect what they actually make. That's why the bank statement loan works so well.
Another thing that we offer is what's called a DSCR loan. Aaron, tell us about DSCR.
I love these because it's a way to buy investment property you're going to rent out that doesn't make you prove your income. It is simply a loan that compares how much the rent is on the property compared to what your payment is. It makes complete sense, because if you're buying a house where the rents are going to be more than the expenses, that's a good loan and that's a good investment.
So a lot of people know that one of the keys to wealth is owning a number of properties, right? Well, a lot of people also use that as a huge tax advantage. So this particular program allows us to just use the rent on that property and not worry about your tax returns.
It goes to the same premise of self-employed folks making more money than their tax return shows. It works the same way for rental properties because expenses are run through rental properties that are associated with that that show you a less net income than the reality. So in summary, a DSCR loan allows you to buy a rental property without verifying your income. We're just looking at the income from the property.
We don't expect you to know all the programs. That's why our team is here to help you out. Please click on the link, get more information. We'd love to see your situation and put you into a new home.